It is Monday, July 15th, 2019. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a very rewarding get your ass kicked at Jiu-Jitsu Monday. I certainly did get my ass kicked, and did just a teeny tiny bit of ass kicking, and I try not to be too egotistical about what I'm doing there in the gym, but it was definitely one of those days, man. I came in weighing a little bit heavy. I actually forgot my fucking gi jacket today. Can you believe that shit? But I mean, I was so jacked up because today was awards day. Promotions rather. And I suspected that I had a promotion in the wings, but I wasn't absolutely certain. It's one of those things where I'll have a really good day, I'll have a really good roll, and just lock it down, and I might even have a couple days where I go in, or a full week where I go in and just I can't help but lock it down. But I tend to get a little bit more submissions than I did before. I want to say over the last month or so, I've been actually a couple months, I've been getting at least one submission per class. And it's not that I'm actually going for submissions, it's just I'm paying attention to how many submissions I actually get. And I mean, they were rare enough before, and they're only now starting to just come, so I'm still having to force it too much. But today I got in a good Kimura. Although I think that one in the end was kind of a surprise for the person that I gave it to, because I don't think they actually expected me to get it in there. I was holding down really good pressure with my head on the forearm, and so like I said, I don't think he really put two and two together until it was absolutely too late. But other than that, that opponent that I was going up against that I got that on, that was all I got him on, and he's only a couple stripe white belt. He's told me that he did a lot of rolling, like outside of his school, and I believe it. The guy's got some game, but yeah, spent a lot of time getting my ass kicked, and you know who you are that are kicking my ass, but I had a lot of fun. I won't deny it. But yeah, I've been kind of injured. But beyond that, I forgot my fucking gi jacket today. I can't even believe that. It's like I forget a lot of things, but that's like one of the things that I typically don't forget. But I'm sure it had something to do with the fact that today was the day that we were potentially being promoted, and that I was terribly excited about the prospect of being promoted. And so yes, I was very happy to actually be promoted. But yeah, we did just an open mat otherwise, and I did I wanted to say 3 out of 5 rolls. I think we might have done one additional roll. It might have been 4 rolls that I did, but I did take 2 of them off. I'm an old man. But beyond that, like I said, I've been kind of tending this right arm issue for the last couple weeks. I had my arm kind of ganked in a Kimura, and so anything like an arm bar or anything like that even threatens it, man, I'm tapping out and tapping early. Like one of the guys that I was rolling with today, he got my arm under his leg, and he kind of extended his right leg that my arm was over, and my arm was over his right leg and under his left leg. And so he kind of pulled back with his left leg a little bit and kind of extended with his right. And I thought he was going for an armbar, so I just tapped. I'm like, fuck it. I'm not going to get that arm any more hurt than it already is. But yeah, it was an interesting roll nonetheless. Every time that I get it in a position where I'm having to create a bar between create a frame between me and my opponent, it hurts, because like in a collapsed form it hurts, and I've been doing what I can to try and rehab it, and that does seem to help. It used to be that I couldn't touch the back of my head without it hurting a lot. But I've been doing like tricep extensions and stuff like that, just trying to either build up the muscles around it to give it a little bit of relief, or, just trying to strengthen up the muscle that I got damaged. But yeah, doing what I can to try and make the most of the time that I do have on the mat. But yesterday I was very, very privileged to go up to Portland and see a couple of my teammates kick some ass. And as a matter of fact, the gentleman who's kind of like the beginning of the lineage here for jiu-jitsu, Mr. Megaton Diaz, was there. And I got to say, I was very, very starstruck by the gentleman. He's very, very nice, very, very humble. I mean, very approachable. I mean, like, he's just any man, But at the same time, there's just something about him that's just, like, much bigger. I mean, like, when I'm looking at him in the pictures that I've seen, he always looks like he's, like, 5'10", 5'11", a much taller gentleman. And I could see why in his presence. It's just there's something in his presence that's very dignified, but nonetheless wants to have a good time, is having a good time, like, wherever he is. And so I can kind of feel that there's this general intensity to everything that he does that just makes him seem like a bigger happening than just a person, And so, I got to see him rolling, and it was fantastic jiu-jitsu. I mean, like I said, I felt very privileged to be that close and witnessing it. And there's one gentleman that I had the honor of training with a long time ago who just kicked everybody's ass. And what was really, really cool about it to me is that he's very young. He's only 19 years old, and the guy is just... He's a terror, and not in like a muscular, or, I mean, he is very strong. He's not a weak guy, but he's not very imposing physically. Like, when you see him, he's got these nice broad shoulders and whatnot, but he's not like, really, really buff. Nonetheless, he knows every fucking move out there. Or, I mean, at least it seems like it on the mat, because he just does some shit that I'm still trying to, like, figure out how the fuck he did it. Anyway, I'm not even going to say the guy's name. I'm sure if you were there, you saw it if you stayed for the ultimate, because this guy took everybody out. He went up against somebody I know that was at least a decade older than him, and he did a number on him. It was 22-0, and he still managed to tap the guy out. So, I mean, if the guy didn't get tapped out, he would have had a 22-0 loss by decision on his record. So, yeah, it was a drubbing. But like I said, he went through, he did everybody in his rank and age group, but then he did the ultimate. And in the ultimate, I think in regular matches he did like 3 matches, and then in the ultimate he did another 5. And the 5, he had like less than 10 minutes between each of them, and he just destroyed everybody. And the last guy, I think he got him in like 3 minutes or something like that, but it was an impressive joke. Anyway, enough of that. Like I said, we just did a nice open mat today. I got in some really good rolls. I'm sure it would have been much better if I had a gi jacket on, but my opponents did something that I thought was appropriate, and that was that they did not wear a gi jacket either. Except for one guy did wear a ski jacket. And I did get submitted a couple of times. Not very many, but a couple. Just enough to let me know it's still possible. Anyway, let's go ahead and throw down with some music. And as far as our first dance is concerned, I feel the need. A little bit of Ski Mask Way, First Dance by Body Count, here on Coin Metal. And that was Meshuggah with The Violent Sleep of Reason. And that's usually what happens after a good punch in the face. Yeah. So as far as what we're going to get into today, I'm going to start it off with some meat. And Let's see if I can find all of it. I'm trying to find this thing by that dipstick Mnuchin, because apparently he had something to say today about cryptocurrencies. And there's going to be some shit with regard to Facebook's Buttcoin sometime in the near future. And so because of that, we got this thing by the head of Calibra Facebook, Mr. David Marcus. This is the testimony of him and the hearing before the United States Senate Committee on Banking, Housing, and Urban Affairs. I'm just going to start off by saying that I think this is like a gross overstep on the part of the federal government, the U.S. federal government, because the fact of the matter is that cryptocurrencies are started by people, not by governments. And I mean, in my book, that means that the government has as much to say about your macrame designs as they do about your cryptocurrency's design and function and purpose and anything else. I mean, it's not up to us to determine how people use these coins. It's up to us to enable global peer-to-peer transactions. That's what cryptocurrencies are all about. And basically eliminating the need for trust, whether we're talking about a government entity or in fact a bank. I just want to take a sip out this. Hold on one second here. Anyway, this is banking.senate.gov. Marcus testimony, blah, blah, blah. Hearing before the United States Senate Committee on Banking, Housing, and Urban Affairs, July 16th, 2019. Testimony of David Marcus, head of Calibra Facebook. Number 1. Introduction. Chairman Crapo, Ranking Member Brown, and Member... Dude, is that a joke? Is that a fucking joke? You gotta wonder. Anyway, and members of the committee, thank you for the opportunity to appear before you today. My name is David Marcus, and I am head of Calibra at Facebook. For most of my life, I have been an entrepreneur building products aimed at improving people's lives. Throughout my career, I have led businesses in regulated industries such as telecommunications and financial services. I became PayPal's president after it acquired my last startup, and I moved to Facebook about 5 years ago to run Messenger and more recently to lead our blockchain efforts. I appreciate the opportunity to speak with you today about the vision for Libra. Libra is about developing a safe, secure, and low-cost way for people to move money efficiently around the world. We believe that Libra can make real progress towards building a more inclusive financial infrastructure. The journey to get there will be a long one, and we recognize that ours has just begun. Chairman Powell has made clear that the process for reviewing Libra needs to be patient and thorough, rather than a sprint to implementation. We strongly agree. That was the spirit with which we published the white paper introducing the Libra project. The time between now and launch is designed to be an open process and subject to regulatory oversight and review. In fact, I expect that this will be the broadest, most extensive, and most careful pre-launch oversight by regulators and central banks in fintech's history. And I'm pretty sure that's with purpose too. We know that we need to take some time to get this right, and I want to be clear. Facebook will not offer Libra digital currency until we have fully addressed regulatory concerns and received appropriate approvals. Before I go any further, I just want to take a moment to acknowledge the 27 other companies that have joined us on this journey, including companies in the payments, technology, telecommunications, blockchain, and venture capital industries, as well as nonprofits. We are pleased to have each of these organizations as partners, and we look forward to working with them and others to make Libra a reality. We approach all of these efforts with humility and a commitment to engage with experts in law, finance, economics, security, compliance, and blockchain technology, as well as with the regulators and policymakers who oversee the stability and security of our financial systems. Yeah, whatever. But we also know how important it is that we begin this journey now. Since publishing our white paper on Libra, I have heard from people all around the world, excited by the possibilities that Libra offers. The status quo is not working for many. It is too expensive for people around the world to use and transfer their money. We believe that Libra can offer a more efficient, low-cost, and secure alternative. I'm excited about the potential that Libra holds, and I am proud that Facebook has initiated this effort here in the United States. I believe that if America does not lead innovation in the digital currency and payments area, others will. If we fail to act, we could soon see a digital currency controlled by others whose values are dramatically different. Dude, that's so fucking too late. Too fucking late. Too fucking late. I believe that Libra can drive positive change for many people who would benefit from it. I also believe that it can provide an opportunity for leadership consistent with our shared values. Dude, people are looking to delete Facebook. What are you talking about? Number 2, the structure and management of Libra. I just want to discuss the vision for Libra, the Libra Reserve, and the Libra Association, and why executing that vision in collaboration with governments, multilateral organizations, and industry can, in time, help deliver a giant leap forward toward lower cost, more accessible, and more connected global financial system. Too fucking late. We already did that with Doge. Libra is designed to be a digitally native currency that can be used around the world. Bitcoin already did that. Libra brings together attributes of the world's best currency. Stability. Why is stability considered a good thing? It's shit. If it goes up in value, I'm happy. If it goes down in value, I'm temporarily sad. Continuing. Low inflation, wide usability, and fungibility. Technology innovations have given people tools to connect and communicate, but while people can send each other texts, videos, and photos, in many cases they cannot easily move value between one another. Dude, you know what? If you can send me a text, a video, or a photo, you can send me money. I can send you money. Fuck you. Continuing. Economic empowerment is one of Facebook's core values, and the 90 million businesses communicating with their customers on the Facebook platform can attest to that. We have done a lot to democratize free, unlimited communications for billions of people. We want to help do the same for digital currency and financial services, but with one key difference. We will relinquish control over the network and currency we have helped create. No, you won't. No, you won't. You won't be able to. The governments won't let you. Continuing. Libra is a payment tool, not an investment. People will not buy it to hold like they would a stock or a bond, expecting it to pay income or increase in value. Instead, Libra is like cash. People will use it to send money to family members in other countries, for example, or to make purchases. Not without paying Facebook, of course. And if you don't like Facebook, well, that kind of fucks you, you know, because you're using their coin and benefiting them by using their coin. And yeah. Anyway, continuing. The Libra Reserve, Libra's financial infrastructure. Unlike existing stablecoins, digital currencies designed to minimize volatility by being pegged to a single asset, Libra will not have a fixed value in any single real-world currency. Instead, Libra will be fully backed on a one-to-one basis through the Libra Reserve, which will hold a basket of currencies and safe assets, such as cash bank deposits and highly liquid short-term government securities. These currencies will include the US dollar, the British pound, the euro, and the Japanese yen. This approach will minimize exposure to fluctuations from a single region, providing further stability for people around the world who could rely on Libra for their daily financial needs. I gotta make an adjustment here. Fucking shit. There we go. Yeah, that's gonna be really fun. You know, instead of suffering the depreciation of one currency, you can suffer the depreciation of a whole basket of currencies. What a selling point, huh? Continuing. The assets in the Libra Reserve will be held by a geographically distributed network of regulated custodians with investment-grade credit ratings to provide high auditability as well as transparency, security, and decentralization of the assets. These custodians, custodians, are well versed in safekeeping billions and even trillions of dollars worth of assets. Trust us. Because Libra will be backed by the Reserve, anyone using Libra should have a high degree of confidence that they will be able to sell it for local fiat currency based on an exchange rate, just like exchanging one currency for another when traveling. Jesus Christ. Monetary policy. The currencies represented in the Libra Reserve will be subject to their respective governments' monetary policies those governments will continue to control. The Libra Association, which will manage the reserve, has no intention of competing with any sovereign currencies or entering the monetary policy arena. It will work with the Federal Reserve and other central banks to make sure that Libra does not compete with sovereign currencies or interfere with monetary policy. Monetary policy is properly the province of central banks. No, suck a dick. It's the fucking policy of the people now. Continuing. And another thing, they are invariably going to compete with the sovereignty of currencies. Like, what would be the point of using Libra if there isn't any exchange rate differential between the dollar and the Libra? And I'm sure they're going to be claiming that because it's a basket of currencies, that any differential is because the other currencies are going up in value. And so, there's a differential there. Now, you know what? To me, this is what this will do on the fiat side of the equation is that anybody who is making money on arbitraging currencies, they're going to lose that. They're going to watch that exchange rate gap, that float that they're making their money in. They're going to watch that narrow and narrow and narrow and narrow. Basically, this will be a global counterfeit fiat currency. Because the fact of the matter is that none of the entities that are currently acting as quote-unquote stable coins, none of them, I think maybe one, and I'm only going to say that because the Winklevi do have a lot of money, they do have a lot of confirmed assets, and so they may in fact have a one-to-one reserve for all of the fucking the Gemini coin that they put out there, or GSD or GUSD or whatever it is. But yeah, they're the only stable coin out there that I would consider quote-unquote possibly solvent. And I say possibly solvent because they could just as easily be counting other assets on their sheets as collateral for the GUSDs that they have in circulation. And in that case, if it's, say, liabilities, or not liabilities, but, say it's loans that they've got outstanding to other people, what if those people default on the loans? Then all of a sudden the backing for your fucking GUSD is gone. or it's temporarily interrupted. And if you're not conveying that to the market, then you're being deceptive and manipulative. And see, this is the problem, is that you have to trust that Gemini isn't being duplicitous and they aren't being manipulative, but you already know that it is in their best interests to do so, because it is cheaper to be manipulative and lie than to actually have the fucking money. This is incentives, kids. Incentives 101. Okay, this is why we have a block reward. This is why we have transaction fees. It's an incentive to play the fucking game right, because it makes it more expensive to cheat than to play by the fucking rules. And see, every time we put into account the possibility of having to trust somebody, and I don't care if we're talking about the Federal Reserve, the Libra Association, Facebook, Mark Zuckerberg, I don't care. As soon as we do that, we've entered into the realm of Trustville, and all of the things that we came here to cryptocurrencies to get away from are now in cryptocurrencies. You know, I mean, every time that you're having to transact off-chain, you're relying on trust. Somebody could default in the background, and you could just as easily lose your money due to some technical issue. This is why we have global settlement in 10 minutes, or we are supposed to, at least on Bitcoin. But fortunately for us, we do have other currencies that do what Bitcoin was supposed to do originally, and there are plenty of them. And I think that in the longer term, that's exactly where a lot of people's money is going to go, and it's not going to be to this fucking Libra coin. I don't care about Facebook's distribution. I don't care about their user base or whatever. None of that shit matters. Okay, like Google has, you know, some 2 billion users and maybe like 10 billion accounts out there, but they've still closed down several of the things that weren't them, that they acquired, then they made them. And you know, I mean, they're in the process of getting rid of Hangouts, but they had Google Plus or G Plus or whatever the fuck that was supposed to be kind of like Facebook or Twitter, and it failed. And I mean, I think it still exists, but nobody uses the fucking thing, or at least nobody that I know uses it. I mean, you've only got so much time to be spending online anyway, right? Anyway, continuing on. Partners and governance of the Libra Association. Overseeing the Libra blockchain and the Libra Reserve will be a significant undertaking and a responsibility. No single organization can or should be solely responsible for it. Meaning that maybe the public will be mining about 10% of it, and not actually the public won't be involved at all, the other companies. Anyway, continuing. We believe a cooperative approach is both warranted and necessary, and we are therefore working to develop the Libra Association, an independent membership-based organization. The initial group of organizations that will work together on finalizing the association's charter and become, quote, founding members upon its completion are, by industry, Payments, MasterCard, Mercado Pago, PayPal, PayU, Naspers, FinTech arm, Stripe, Visa. Technology and marketplaces will be Booking Holdings, eBay, Facebook, Calibra, Farfetch, Lyft, Spotify, and Uber. Telecommunications will be Iliad and Vodafone. Blockchain services, Anchorage, Bison Trails, Coinbase, Zappo. Venture capital will be Andreessen Horowitz, Breakthrough Initiatives, Ribbit Capital, Thrive Capital, Union Square Ventures, and then nonprofit and multilateral organizations and academic institutions, Creative Destruction Lab, Kiva, Mercy Corps, Women's World Banking. Each of the Libra Association members, a diverse and global group of companies, not-for-profits, NGOs, multilateral organizations, and academic institutions will be represented on the Libra Association Council Through the council, the association will be responsible for the governance of the Libra blockchain. It will oversee the evolution of the blockchain's protocol and network, and will continue to evaluate new technologies that enhance privacy in the blockchain while taking into account concerns of practicality, scalability, and regulatory impact. It will also serve as the governing body through which the Libra Reserve is managed. All decisions will be made democratically and transparently. To ensure the association includes a diverse membership, the association will work to remove as many financial barriers as possible so that a significant number of nonprofit and multilateral organizations, social impact partners, and universities can join. Facebook teams have led the creation of the Libra Association and the Libra blockchain and will maintain a leadership role through 2019. Once the Libra network launches, however, Facebook and its affiliates will have the same privileges, commitments, and financial obligations as any other founding member of the association. We hope to have approximately 100 such members before the Libra blockchain launches. As one member among many, Facebook's role in governance of the association will be equal to that of its peers. Facebook will only have one vote and will not be in a position to control the wholly independent organization. Number 3. Implications for commerce and Libra users and consumers. Regulatory oversight and financial stability. The Libra Association is committed to working with policymakers and regulators to achieve a safe, transparent, consumer-friendly implementation of Libra. The association recognizes that blockchain is an emerging technology and that policymakers must determine how this technology will fit into the regulatory landscape. Actually, no, it's none of their motherfucking business. Continuing on. Regulatory frameworks for digital assets are beginning to emerge nationally and internationally, although nobody's bothering to listen to them. The Libra Association will continue to work with regulators and policymakers to ensure that it complies with all applicable legal and regulatory requirements. In other words, they're going to go broke. Over the past year, federal regulators have repeatedly emphasized their commitment to fostering innovation. That's a bunch of bullshit. This is true as a general matter, as one can see with the Treasury Department's report on fintech and innovation. Yeah, you know what? They love innovation so much that as soon as they heard about Libra and exactly what it was supposed to do, they called for its immediate termination of its innovation and development, and for them to come and talk to Congress about what they were doing. Yeah, that's how much they love their fucking innovation. Bunch of fucking bullshit. Continuing. But it is also true in the use of novel technologies to support compliance with anti-money laundering, combating the financing of terrorism, and sanctions regulations. Yeah, fuck you. The whole reason to use cryptocurrencies is to be able to circumvent all those sanctions and whatnot and embargoes and shit. So that's another place where Facebook is basically going to be kicking themselves out of people's wallets. Continuing on. The U.S. Treasury Department's Financial Crimes Enforcement Network, FinCEN, the Federal Reserve, the Federal Deposit Insurance Corporation, and the National Credit Union Association have come together to emphasize the important role that new technologies can play in helping companies, large and small, meet their AML, CFT, and sanctions compliance obligations. The Libra Association is committed to taking up this charge and devoting its considerable technical expertise to this task. Do you really want to put them in control of your fucking wallet? Not me. To be clear, the Libra Association expects that it will be licensed, regulated, and subject to supervisory oversight. Because the association is headquartered in Geneva, it will be supervised by the Swiss Financial Market Supervisory Authority. outside of the jurisdiction of the Federal Reserve. We have had preliminary discussions with FINMA and expect to engage with them on an appropriate regulatory framework for the Libra Association. Dude, considering the other entities that they're licensing, you're in good hands. The association also intends to register with FinCEN as a money services business. Anti-money laundering, the Bank Secrecy Act, and other law enforcement and national security concerns. The Libra Association is similarly committed to supporting efforts by regulators, central banks, and lawmakers to ensure that Libra contributes to the fight against money laundering, terrorism, financing, and more. A network that helps move more paper cash transactions where many illicit activities happen to a digital network that features regulated on and off ramps with proper know your customer practices will be used by absolutely nobody, combined with the ability for law enforcement and regulators to conduct their own analysis of the on-chain activity, will present an opportunity to increase the efficiency of financial crimes monitoring and enforcement. The Libra Association will continue to engage proactively and openly with all relevant stakeholders on these key issues. Libra should improve detection and enforcement, not set them back. Yeah, dude, this is why nobody is going to use your shit. Continuing on. The Libra Association will also maintain policies and procedures with respect to AML and the Bank Secrecy Act, combating the financing of terrorism and other national security-related laws, with which its members will be required to comply if they choose to provide financial services on the Libra network. You notice one thing: all of the entities that they noted on here that they're planning on onboarding onto their Libra Association, none of them were like Goldman Sachs. Or, I don't know, Visa was in there, but I don't really I consider them like the kind of entity that likes to stick a tentacle everywhere and just see which ones get chopped off and which ones get chopped off. They just leave it alone. So they'll dabble in everything. Like there's been all kinds of Visa-backed cryptocurrency associated coins, and for some cards. But for some reason they typically end up getting closed down, and usually it has to do with regulatory compliance, that people are actually trying to use their cryptocurrencies on these cards for what they want to use them for, not what the regulated entities want people to use their fucking money for, and they run afoul. There'll be some non-compliant usage of the cryptocurrency via the card, and all of a sudden, everybody's got to get their bank accounts closed, and the thing has to shut shop. Well, that is the problem with trying to associate at all with the existing regulated fiat currency markets. And this is why cryptocurrencies are designed specifically to be used as money without having to involve any kind of legal or, any kind of corporate governance over your currency or your transactions. Continuing on. Protecting the privacy and security of personal information. Yeah, you do a shit job of that now anyway. Protecting consumers and ensuring people's privacy is one of the Libra Association's top priorities. Okay, hold on right there. They say it's one of their top priorities, but here's the thing. How do they comply with AML KYC bullshit if they're not giving up your your privacy over your information? They're going to be reporting that shit to all of these federal entities and probably several other corporate ones, and yet they're going to be protecting your privacy. That's one of the things that lets you know this is not meant to take off. The Libra blockchain, the fucking Libra coin, it's not meant to exist. What it is meant to do is give regulators an opportunity to say something about all the different processes that this stupid ass thing is supposed to do, and relegate the different functions to different federal entities, and so if you're the function of your protocol or whatever, you might get some fucking report from FinCEN or the FDIC or somebody else saying, oh, your shit's not compliant, you can't be on any regulated exchanges. That's fine. We'll set up non-regulated exchanges and we'll start over again like we did back in 2013 to 2014, where we wanted to trade our Bitcoin for other cryptocurrencies. That's going to start again. You think you're like going to draw up a bunch of walls and barriers and shit that's going to stop people from doing this activity. I'm sorry, it's a decade in. This shit is ubiquitous as browsing on the internet, and no matter how difficult you've made it to transact on the Bitcoin network, it's just as easy to transact on one of 2,000 fucking altcoin networks that have blown up since. And I'm expecting another such rush of that. If they ever try and they ever get it to the point to where they've gone through all these talks, they've drawn up their regulatory frameworks, and then they're trying to force like Bittrex and Binance and all these other entities to adhere to the regulatory stance that they have on certain coins. What's going to end up happening is just what I'm talking about, where people are going to go about creating their own cryptocurrencies that aren't any more compliant than the existing ones. But of course, they'll probably be a little bit cheaper to mine because the difficulty won't be as high. And we're just going to see a shift back to where we were between, I would say, 2010 and 2013. That's pretty much it. Anyway, continuing on. Let's see. The association is committed to working with regulators as they explore the application of relevant laws to distributed ledger technology. Privacy on the Libra blockchain will be similar to existing blockchains. Transactions include only the sender and receiver's public addresses, transaction amount, and the timestamp. No other information will be visible. Depending on which entity we're talking about, I'm sure that's the case. The association will not separately hold any personal data on people who use the blockchain, although Facebook might, who use the blockchain, no matter how it otherwise could be collected, and will not run any infrastructure. As a result, the association cannot and will not monetize data on the blockchain. For the purposes of data and privacy protections, the Swiss Federal Data Protection and Information Commissioner, FDPIC, will be the Libra Association's privacy regulator. Yeah, whatever. Notice that they're not talking about somebody in the United States being their privacy regulator. Continuing on. 4. The structure and management of Calibra. Because the Libra blockchain will exist as an open source ecosystem, businesses and developers around the world are free to build competitive services on top of it. And Facebook intends to be one of the many businesses that will do so. To that end, we recently announced the formation of Calibra, a Facebook subsidiary, whose goal is to provide financial services using the Libra blockchain. The first product Calibra intends to introduce is a digital wallet for Libra that will be available in Messenger, WhatsApp, and as a standalone app. The Calibra wallet will let users send Libra to almost anyone with a smartphone, similar to how they might send a text message, and at low to no cost. We expect that the Calibra wallet will ultimately be one of the many services and one of the many digital wallets available to consumers on the Libra network. We do not expect Calibra to make money at the outset, and Calibra customers' account and financial information will not be shared with Facebook Inc. Yeah, it's not going to be shared, it's going to be harvested by Facebook Inc. And as a result cannot be used for ad targeting. Yeah, that's a bunch of bullshit too. Our first goal is to create utility and adoption. enabling people around the world, especially the unbanked and underbanked, to take part in the financial ecosystem. But we expect that the Calibra wallet will be immediately beneficial to Facebook more broadly because it will allow many of the 90 million small and medium-sized businesses that use the Facebook platform to transact more directly with Facebook's many users, which we hope will result in consumers and businesses using Facebook more. The increased usage is likely to yield greater advertising revenue for Facebook. And that's another reason why most people are not going to use this thing. Number 5, implications for consumers and users of the Calibra wallet. Regulatory oversight and financial stability. Companies offering services on the Libra blockchain will need to be fully compliant with the laws and regulations in the jurisdictions in which they operate, and that includes the Calibra wallet. One of the reasons that Calibra was established as a Facebook subsidiary was because it will be providing financial services, and it will be regulated accordingly. The Calibra wallet will comply with FinCEN's rules for its AML-CFT program and the rules set by the Office of Foreign Assets Control, OFAC, with respect to financial sanctions. State financial regulators will regulate Calibra as a money transmitter, and the Federal Trade Commission and Consumer Financial Protection Bureau will monitor for consumer protection and data privacy and security issues. Calibra has filed for state money transmitter licenses in the U.S. and is also registered with FinCEN as a money services business. Anti-money laundering, the Bank Secrecy Act, and other law enforcement and national security concerns. Similarly, Calibra will comply with the Bank Secrecy Act and will incorporate KYC and AML-CFT methodologies used around the world, including those focused on customer identification and verification. Whoa, hold on. How can you do that? How can you be protecting my privacy but using KYC, AML, CFT methodologies used around the world, including those focused on customer identification and verification, and risk-based customer due diligence, while developing and applying technologies such as advanced machine learning to enhance transaction monitoring and suspicious activity reporting? Dude, what is the fucking point of using their coin if they're going to use this to... if its only function is to provide them with data to monitor your shit and make sure you're fucking compliant? Why would I want to use that? I assure you, there's probably some people that I would be wanting to transact with, but that for whatever reason, banking or otherwise, is like illegal in Somalia. So maybe their branch of FinCEN is going to come and bark at me about some shit that I'm doing online. No, fuck you. I'm just going to avoid that entirely by not transacting my monetary value in your coin. There you go. Continuing on. Let's see. Calibra's efforts will be commensurate with its risk profile based on several factors, such as Calibra's product features, customer profiles, geographies, and transaction volumes. Protecting the privacy and security of personal information. Oh, God. Calibra is also being designed with a strong commitment to protecting customer privacy. Calibra believes that customers hold rights to their data and should have simple, understandable, and accessible data management controls. So in other words, they're going to be collecting all kinds of data, but they're going to be expecting you to do your due diligence and ferret through all the little settings to make sure they're not the track all my shit and report me directly to the IRS box isn't checked. Continuing on. Calibra will not share individual customer data with the Libra Association. Oh yeah, but it'll share it with fucking IRS, CFTC, FDIC, SEC, CFTC, whatever. Continuing on. And exempt in limited circumstances such as preventing fraud or criminal activity and complying with the law, Calibra will not share customers' account information or financial data with Facebook unless people agree to permit such sharing. Yeah, like I said, you have to ferret through all the fucking settings for the little checkbox that, you know, there'll be like the paragraph next to it saying, you know, Facebook can track and share and monetize all your shit and all the data associated with all the transactions that you do with everybody on this wallet. You know, and you got to like uncheck that or something. Continuing on. Calibra customer account information and financial data will not be used to improve ad targeting on the Facebook Inc. family of products. Yeah, but it'll be used to fucking report your ass and rat on you and all that other shit. Conclusion. The goal for Libra is straightforward. A digital currency built on a secure and stable open source blockchain backed by a reserve of real assets and governed by an independent association. We want to create more access to better, cheaper, and open financial services, no matter who you are, where you live, what you do, unless it's illegal, of course, or how much you have. We recognize that the road to reaching that goal will be long, and it will not be achieved in isolation. That is why we have begun publicizing the vision for Libra and why we have been discussing and will continue to discuss how to best achieve that goal with businesses, nonprofit and multilateral organizations, and academic institutions from around the world, as well as with policymakers, central banks, and regulators. We recognize the authority of financial regulators and support their oversight of this project. Thank you for having me here today. I look forward to answering your questions. Yeah, dude, whatever. You don't speak for me. And I don't give a fuck how much they want to recognize you as me. You do not speak for me. Whatever they have to say about what you say does not fucking apply to what I'm doing. There you go. That's pretty much it. Like I said, I really believe that Facebook doesn't actually intend to launch Calibra. The stated goals of it are completely antithetical to one another, really. You know, all of that hubbub about customer privacy and whatnot, there's nothing in there that says explicitly that they will not rat your ass to every single federal and state entity on this planet, as well as several corporate entities as well. There's nothing in here that says that they won't use your personal profile and the information that they've already gleaned on you to rate the transactions that they give you. Maybe they'll be giving you an additional interest rate because according to their ratings, you're an asshole. And so you got to be punished. And my only fear on this, and actually I don't really have a whole lot of fears on this, I think in the longer term, they're going to say a bunch of stuff. And they're going to try to apply it to things like Doge and Bitcoin and other cryptocurrencies out there. And they're going to find out that they can't do it. And I'll give you a really good example of why I believe this is true. We'll take, for example, Ethereum. Ethereum has been trying to change to, or at least the developers for Ethereum would rather that Ethereum be a proof-of-stake coin as opposed to a proof-of-work coin. Well, it's been a proof-of-work coin. It was started as a proof-of-work coin, and it is still today a proof-of-work coin, despite the fact that the Ethereum developers have been writing for POS and been pushing for POS for the last, 3 years. And they still can't get the miners to do it. They provide the fucking upgrades, and they're like, yo, hey, implement this code, man. so we can like make this transition, this wonderful transition to POS. And the miner's like, no, I'm making plenty of money with what I'm doing, and I don't want to do that. I don't want to mine a proof of stake coin. So if you want to continue to have my hashing power on the network, you're going to shut the fuck up, you're going to leave me the fuck alone, and then let me mine the fucking coin. That's been going on for about 3 years now. And so, with regard to this Calibra and all the... No. They're going to try to comply for like 30 seconds. They're going to figure out that it's completely fucking impossible. And they're going to say, shut the fuck up about, trying to comply and be regulatory compliant and all that. No. We're just gonna just do it. And we're going to try and be better than the options that are out there and compete with them on the same playing fields that they are operating on, and hope that in some day in the future that will corral enough users to us that will be able to get a significant percentage of the market under a compliant umbrella, or an umbrella of compliance. And of course, that'll be another decade in the making, where they're trying to winnow down all of the other options. But this is a newfound freedom, and it's been in the hands of pretty much everybody on this planet for the last decade. And I don't really think that urge is going to be squashed as easily as people think. That some regulators are going to be able to, construct their regulatory framework, and then all of a sudden every coin on the planet is suddenly going to comply with these. I mean, there are currencies that are transacting right now, that are being traded right now on itty-bitty exchanges that are not compliant. And the people that are transacting on those exchanges are completely aware of this fact and are quite happy about it. They understand and accept the risk associated with working outside of the regulatory umbrella. And they don't really give a shit. Because for the most part, their shit actually goes through. And they're making money doing it. And that's another part of this whole stable coin talk that we've got to have here, is that when people are talking about stable coins that don't have any volatility in them and whatever, basically what they're saying to you is that you're not supposed to be making money on holding a particular money. Well, if you can make money on holding a particular money, and you have other coins out there that you don't make any money by holding, which one, what are you going to hold? I mean, if there's no real value in it beyond, even a sentimental or philosophical value, if there's no value in supporting a particular coin for you, basically its utility is going to be the determining factor for you. And if it's bogged down with a whole bunch of regulation and a whole bunch of compliance shit that you would rather not participate in, there are plenty of other options out there available that lack this surveillance and do not have the same issues with regard to regulating you and reporting on everything you fucking do. So again, you're going to be evaluating those values, and you're going to say, well, which one do I want to hold and utilize as my monetary value? That's a power that's conveyed to you by cryptocurrencies and has been in your hands for the last decade, is that now it is a choice for you. And you can be evaluating the people that are associated with the coin and the function of a coin itself, and using that as the barometer of whether or not you want to transact in it. And some people look at that whole thing and they kind of sneer at it, because right now they can use US dollars and they can still, buy and sell cocaine with US dollars, and so it's okay. But the moment they can't get away with that anymore, they're going to be looking to us. They're going to be looking to cryptocurrencies to solve this problem. And I can guarantee you, Libra will not be the one they go to. Anyway, let's go ahead and throw back down into some music. And I've been wanting some Lamb of God, so here it is. footprints here on CoinMetal. And that was Static X with Machine. Yes. And so, the United States is going through, at least right now, verbally, up front, what every single other country has gone through with regard to cryptocurrencies, is that the public has shown a greater interest in them, and so the regulators and existing entities decide that they need to speak up and kind of try and corral your opinion back down to nothing. Well, the problem with that is that previously there was a dependent linkage on these regulated entities, the existing regulated entities. And so, because of that dependence, previous attempts to do what cryptocurrencies have done have failed. There's little associative things that they could nick at, places where they could take entities to court. And the thing is that cryptocurrencies were set up specifically to get above and beyond all of that. Part of the creation of ILF in our current systems is the existence of perpetual money flow. Where your budget is factored into somebody else's budget, and it's going to get allocated the money year after year because your contract is for 5 years, and so you really don't need to do anything for 3 of those years. You could receive all kinds of, watchdog warnings and all that other bullshit, and none of it really makes any difference. You don't actually have to produce because, well, fuck, your funding is locked in. The greater the lock-in, the harder it is to terminate that funding, the worse the service is, either initially, up front, and or in extension, later on, further down the road. Where initially everything looks wonderful, everybody's getting paid on time, everything's cool. 6 to 12 months later, though, the money's all dried up because the founder was off in Colombia or the Bahamas or something, boats and hoes, lots of coke, alcohol, high-end alcohol, by the way. And then we're, in some Senate subcommittee meeting, we're talking about the termination of the funding, and it'll be another 6 months while you're jerking off and implementing, and all of that shit costs people money. All of that shit puts people out of work, puts people on the street because they can't keep up with the legal fees or anything. All of that shit is a greater liability in the greater term, in the longer term, than simply settling our transactions in 30 seconds to 10 minutes, depending on which cryptocurrency we decide to use. And with that benefit, that lack of necessity to trust that, everybody's going to pay off and all the money's going to go to all the entities that it's supposed to, rather than having to trust in that, even in a mathematical and computive way, that we're depending on third-party intermediaries to always fulfill and not piss away the underlying collateral. As long as we don't have to depend on those systems, all of the hierarchies that are built upon them, because if there's trust involved, you got to have oversight, right? Well, I don't really trust anything about Doge other than the fact that I have some. That's all I have to trust about it. I can look right now and verify that the network is operational, and that plenty of people are mining it out there. There's plenty of hash power to get my transaction done, and as long as that's true, I'm going to put greater faith in Doge than some entity or some currency that's got a grouping of existing legacy finance entities existing as governors of it. I don't put any trust in that. These are the same people that participated in the collapse of the economy a couple times within this last decade. So, and when I say collapse of the economy, I just mean little sectors of it, where we had the housing collapse, financial crisis, all that shit, right? Anyway, continuing on, I got this article here on ccn.com. Here's what Mnuchin just said about Libra and Bitcoin. And this is by Joseph Young. It was authored the 15th of July 2019 at 1441. So that's 2 p.m. And no indication of time zone. Shame on you, Joseph. But yes, penis. Stephen Mnuchin, the United States Secretary of the Treasury, just concluded an official briefing, which we're going to click on crypto regulation and various security issues related to assets like Bitcoin and Libra. Echoing the statement released by U.S. President Donald Trump a few days ago, Mnuchin reaffirmed the speculative nature of crypto assets. That's one of the reasons why we use them, you ass! Continuing, Mnuchin cited serious security issues regarding Bitcoin and other crypto assets, stating that the rise of cryptocurrency to support illicit activity is a national security issue. Bullshit! It's called commerce. He said, quote, "Recently, as you know, there has been a great deal of interest about digital assets, including cryptocurrencies such as Bitcoin and Libra. There are many regulatory and supervisory questions regarding Libra, virtual assets, and virtual currencies." I noticed that he didn't say cryptocurrencies in there. So, yeah, fuck you. Cryptocurrencies such as Bitcoin have been exploited to support billions of dollars of illicit activity like cybercrime, tax evasion, extortion, ransomware, illicit drugs, and human trafficking. Many players have attempted to use cryptocurrencies to fund their malignant behavior. This is indeed a national security issue. In the near term, the U.S. government and its financial agencies, such as FinCEN, are expected to tighten their oversight on the cryptocurrency sector. What will change about crypto? Not a goddamn thing. According to Mnuchin, the Financial Stability Oversight Council's working group on digital assets has been established to enable all financial authorities, including the SEC, CFTC, and FinCEN, to work together to combat risks posed by crypto. He said, quote, "The United States has been at the forefront of regulating entities that provide cryptocurrency." No, you don't. You don't provide cryptocurrency. We provide cryptocurrency, not you. Continuing, "We will not allow digital asset service providers to operate in the shadows and will not tolerate the use of cryptocurrencies in support of illicit activities." Yeah, fuck yourself. Quote, "Treasury has been given very clear to Facebook, to Bitcoin users, and other providers of digital financial services that they must implement the same anti-money laundering and counterfeiting in countering financing of terrorism, known as AML-CFT safeguards, as traditional financial institutions." Yeah, you know what? Fuck you. Continuing, Mnuchin cautioned that crypto entities will be subject to the same level of regulation, oversight, and expectations as traditional financial institutions, indicating that the government will increase its efforts to regulate the space. Yeah, fuck you. Quote, "The rules governing money service providers apply to physical and electronic transactions alike. As money service businesses, cryptocurrency money transmitters are subject to compliance examinations, just like every other U.S. bank. To be clear, FinCEN will hold any entity that transacts in Bitcoin, Libra, or any other cryptocurrency to its highest standards." Mnuchin added, "Yeah, you're going to go fuck yourself." As for Libra, Mnuchin stated that the government will allow the development of the asset if it meets the standards set forth by the government. No, dude, the development of it is happening in Geneva, which is outside of your jurisdiction, so you can jerk off in the corner and act like you've got some sort of control over this shit, but it's still going to happen anyway. Continuing. As for Libra, Mnuchin said the government will allow development, blah, blah, blah. Quote, we've had multiple meetings across the regulators and with representatives of Facebook and expressed our concerns. We've also had multiple meetings of the FSA working group. There are these discussions going on, and they will continue to go on. To the extent that Facebook can do this correctly and can have a payment system with proper AML, that's fine. But they have a lot of work to do to convince us. I don't give a fuck if they do convince you, dude. I'm still not going to use their shit. Bitcoin industry executives remain optimistic. Travis Kling says the chairman of the Fed and Treasury Secretary both agree that Bitcoin is a speculative store of value. Both of them, along with the president, agree that Libra and Bitcoin are two very different things. Wildly bullish. Kinda. The crypto industry responded positively to Mnuchin's press conference. Barry Silbert, the CEO of Digital Currency Group, one of the largest venture capital firms in the crypto space, said that the briefing on crypto is, quote, complete and total validation of Bitcoin. Quote, never imagined I'd be watching the Treasury Secretary of the United States hold a press briefing from the White House, RE Bitcoin, and cryptocurrency so soon, he said. Oh, dude. Hold on. Yeah. Whatever. Cody, we're getting into some of the responses here. Cody Whedon says, level playing field, keep out fraud and illegal activity. Sounds just like what the market needs. Yeah, no, go fuck yourself, dude. It's not up to you to define what is legal and illegal about activity in cryptocurrency. That's for people within cryptocurrency to define. You know, when we're talking about what's legal and what's illegal, there are certain things that are quote-unquote criminal activities that I could see being regulated despite whatever medium the monetary value is being transacted in. You know, if it's murder for hire, I don't care if the person is being paid in Bitcoin. If you catch them and they were going to murder somebody for Bitcoin, bust them anyway. Because they were going to murder somebody, not because they were being paid with Bitcoin. And the fact that they were being paid in Bitcoin probably wouldn't help out your investigation anyway. Unless, of course, you caught the transaction, like, you know, you caught somebody on one end of it, or you knew who the payer or payee was. You know, that would help. But again, you'd already have to know several elements of the crime before the fact that Bitcoin was being used in the transaction would be of any relevance to you. Anyway, continuing on. Christopher Vanderhorst says the US dollar has been involved in more illicit activity than any other product in world history. Goddamn right, Christopher. Cody Whedon says, exactly, you know what I'm thinking? It's time for the USD to prove itself better than Bitcoin in the open market. If it can be more frictionless, more secure, more transferable, less inflationary, etc., if it can do that better than Bitcoin, some people will want to hold it. But good luck. Oh, and, you're going to get illicit activity wherever you look. That's just a smokescreen anyway. Damn Skippy. I agree with you 100% there, Cody. You know, this is basically, it's just an excuse. You know, I mean, it's like they used WMDs as an excuse to invade Iraq. But 20 years later, we find that was complete bullshit. And actually, it wasn't even that long. It took us like 2 years later, and we found out that was complete bullshit. And so, you know, here we are. We're still occupying Iraq, by the way. I don't know how that works. You find out that it's bullshit. You're supposed to like pull stakes and bail. You know, not stay around and try to simulate a government. Anyway, let's see here. Chukwuma E-meme says, welcome good old news, long live innovation, knowledge, yeah, whatever. Robert Bizarro says, this only confirms my thoughts. For over the last 3 years, Bitcoin is here to stay, and it is a viable asset with tremendous upside potential. You can ignore digital assets and cryptocurrencies at your own risk. Don't get left behind. The future of money is at hand. I couldn't agree more, Robert. You know, the U.S. government is basically being put in a position to have to say something only because, I believe anyway, they're getting ready to apply some monetary policy. And by that I mean they're getting ready to crank out some new U.S. dollars. And when they do that, they want to retain the monetary value in U.S. dollars. They want to see as little capital flight as possible. However, people operating in their own self-interests will do things like invest in art, invest in vehicles, invest in property, invest in vintage alcohol, will buy drugs, will sell drugs. But they will do these things because no matter what happens to the US dollar, they'll be able to transact it. So, you know, if they had like, you know, a pound of weed or something like that, and they happen to be in a market where there's a relatively consistent demand for weed, that they would be able to continue to sell that weed and make US dollars no matter what the current exchange rate on the market is. You know, if there's a little bit of slippage on the US dollar, it used to buy a gallon of gas for $3, you know, and tomorrow it's $5. Well, you know, that's going to affect everything. That's going to affect the prices of everything. You know, suddenly your sodas are going to be $3 and your hamburger at McDonald's is going to be $9 and so on and so forth, right? But your pound of weed is still going to be a pound of weed. And so when that exchange happens, you know, instead of being $30 for an eighth of weed, you're going to be able to sell it for $50. And you're going to be able to get $50 for it because that's what the market asks. That's the current exchange rate for it. Supply and demand. The same is to be said about cryptocurrencies. That as they print more money at the Fed and they issue it out to the market, the value of those dollars, or the value of existing dollars in the market, goes down in a relative sense. And again, you will see the impact everywhere. You'll see it first in gas, usually, and then it will extend it elsewhere. And you'll see it be expressed in multiple ways, and one of which being shrinkflation, as noted by Max Kaiser, where you'll pay the same, if not slightly more, usually about 7 to 8% more, for the same thing that you were buying yesterday. And the ones that you're buying, they're about 10 to 15% less in content. You know, either they've put some corn filler product, you know, some corn syrup or some corn flour, some other bullshit like that, instead of, you know, peanut butter or chocolate or, you know, caramel or something like that. Or they make some other adjustment in the ingredients just to offset the cost differential between what they were providing yesterday and what they're providing today. Because it's going to cost them more to buy the products that they use to make their products with. And this is where cryptocurrencies are going to change the paradigm, because in a real sense, you know, people bitch about the volatility of cryptocurrencies. 90% of the volatility that you are noting is due to what's happening in fiat markets, not because of what's happening in cryptocurrency markets. You know, like, you know, Bitcoin isn't suddenly issuing 300 Bitcoin per every 10 minutes and flooding the market with them and depreciating the value of Bitcoin. That's not happening. There's no possibility of that happening, because it's every 10 minutes more are issued, and that's halved every 4 years. This is a truism about it. Now, it might happen slightly before 4 years, because those miners are working really, really hard, and so they're completing the blocks in less than 10 minutes on the average. And so in the longer term, that's going to shorten the time when the block reward will be actually profitable for people. And so, of course, that will cause the price of Bitcoin per Bitcoin to go up in US dollars and other fiat currencies, that is. Anyway, let's go ahead and throw back down into some music. And I got in some Tesseract. I've been dying to play it. So here it is, Survival, here on Coin Metal. And that was 12-Foot Ninja with Coming For You. And so I got this one little short thing that I wanted to throw out there. And this is in the wake of all this talk of regulate this, regulate that, regulate, yeah, whatever. Okay. This thing has been going on for like 3 years now. And there's been no regulation of this shit, despite the fact that it's tantamount to counterfeit fiat. You know, of all the things that these people should be talking about regulating, it should be fucking stable coins, because they're supposedly quote-unquote pegged to US dollars and other fiat currencies, meaning that there is supposedly money, actual a volume of backing these things. Supposedly. Anyway, continuing on. I got this thing on cryptoslate.com. This is by Priyeshu Garg, and I'm going by the face, yes, penis. This is authored 47 minutes ago. Tether accidentally issues $5 billion worth of USDT, claims it was an issue with decimals. Tether, the issuer of USDT, accidentally issued $5 billion worth of its own stable coin, while Poloniex was conducting a USDT chain swap from Omni to Tron. The CTO of Bitfinex and Tether said there had been an issue with the token decimals, after which the company burned the entire $5 billion supply. Tether makes a $5 billion mistake. In what could be the most expensive typo ever made, Tether mistakenly issued and subsequently burned 5 billion USDT coins. The mistake was first spotted by Whale Alert on... Okay, imagine that. It was spotted by Whale Alert. It was reported by Whale Alert, which is a Twitter account. Okay, why did it take Whale Alert to catch it before they actually... Anyway, continuing on. The mistake was first spotted by Whale Alert on July 13th, a Twitter account dedicated to reporting major crypto transactions. The tweet initially caused a massive stir in the crypto community, leaving many traders in disbelief over how the company managed to mint $5 billion worth of cryptocurrency. Any prosynthesis comment, more than the entire USDT supply suddenly issued on Tron. This is a joke or a Tron bug, people. No, it wasn't. It was neither. If it hadn't been reported, it'd probably be in circulation right now. Continuing on. However, Tether reacted quickly and burned the entire supply within minutes. Paulo Arduino, the chief technical officer at Tether and Bitfinex, responded to Whale Alert's tweet, owning up to the mistake. Arduino said there had been an issue with the token decimals, as the company was trying to move $50 million from Bitcoin's Omni blockchain to Tron. Okay, dude, if that kind of mistake can be made, what's to say there aren't billions of dollars worth of other mistakes out there that were made that were like supposed to be like $5,000 or $50,000 transactions? Continuing. Justin Sun, the founder and CEO of Tron, confirmed that 50 million USDT was eventually transferred from Omni to Tron, providing the list of all token transfers to Tron. The crypto community is not happy with Tether. After the dust from the incident had settled, a few theories about how and why did Tether make such a disastrous mistake came up. On July 14th, the Tether treasury burned 4.5 billion USDT, which could mean that the Tether's original intention was to create 500 million USDT. While this sounds like a reasonable explanation on how the company accidentally turned 500 into 5,000 million, it left the question of how it was able to create 500 million USDT in the first place. Tether hasn't been a stranger to controversy, as doubts about its ability to back all of the USDT in circulation with fiat currency have been increasing in the past couple of years. Conspiracy theories about whether this was an intentional act to manipulate the price of Bitcoin were quickly shot down by Arduino himself, who said that the mistakes like these can actually happen. Arduino claimed the company was dealing with different blockchain or tool chains across multiple blockchains, allowing a mistake like this to slip through. Yeah, dude, and we fucking pay for it. Fuck you! Jesus Christ. It's hard to say whether Tether's accidental $5 billion inflation had anything to do with Bitcoin's sudden drop in price in the past couple of days, as it often causes significant fluctuations in its price. USDT briefly lost its dollar peg after the news about the accidental mint gained traction, but managed to recover within hours. Yeah, it's a peg that it doesn't deserve because it doesn't have the funds. And I say again, if there is any place for any kind of regulatory entity to be saying jack shit about what's going on in cryptocurrency, it's with stable coins. And I don't give a fuck that Goldman Sachs has their coin and JP Morgan had their coin. Those motherfuckers need to be audited too. You know, the fact of the matter is that we are in Trustville with stable coins, and the fact that they're being ignored just tells me that our regulators are colluding with them. That's it. Collusion. There you go. And I mean, what more proof do I need? You know, their complete inaction and ignoring of Tether and all that should be the immediate red flag to you. That should say these two entities are probably in bed with one another, probably working in concert with one another, and to my detriment. Anyway, that is all I've got. Thank you very, very much for listening. I certainly do appreciate the support. We will be back again on Wednesday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. Not even Stephen Mnuchin. Thank you again for listening, and y'all have an excellent evening. As far as our last dance, Static X. I'm with Stupid. Here on Coin Metal. Thank you again for listening, and y'all have an excellent night. Good night.